kind of a brief overview on credit and what credit looks like, what you can do to help improve credit, and how you can get ready for home buying, especially if you're a first-time home buyer or you feel like you have some credit challenges. This is our pro, and this is who we always use, and I highly suggest. I've had a 100% success rate whenever I've worked with Premier Credit. They're fabulous. Every client that I've sent to them that has done what they have told them to do has been able to get to where they needed to be to purchase a home. So this is something that has helped a lot of my clients and I'm very passionate about. So I'm going to go ahead and give this over to Alex.
Awesome. Thank you. Sorry, that's
No, you're good.
my one job is to make sure that doesn't happen. My name is Alex, and I'm the president and owner of Premier Credit Consulting. I hope everybody can hear me okay. So if I need to yell, I will, and I apologize to the people that are here in person. But I was asked to come and talk a little bit about credit today, and before I get into the content, which we're going to cruise through a lot of the content just to kind of give a brief overview on how credit works, I just want to take a minute and just say how grateful I am to be here. I know that credit can oftentimes be a complicated subject. Sometimes it's complicated because it's oddly emotional, right? Sometimes it becomes a problem at some of the points in our lives where we're making really big decisions, like trying to buy a house. And so my goal is to try to provide content and tools and practices that you can implement so that as you get ready to buy a house, you can feel confident and you can be ready to take that next step and have a healthy credit score. So as we go through this, don't hesitate to ask questions or to put questions in the chat there. So today's class, we're going to be talking about Credit 101. We're going to start with understanding your credit report. Don't fall asleep during this point. It is a little bit boring, but I will tell you it is important because knowing what you're looking at on your credit report is critical. We want to look at credit reports beyond just the credit score, right? We want to look at the actual data that's on the credit report. So when you're looking at your credit report, you're going to see a handful of common accounts. You're going to see revolving accounts. These are credit lines that allow you to borrow up to a specified amount of which you can pay back over time. A good example of these are credit cards, okay? We're going to talk about the impact that revolving lines of credit have on your credit score. And the next one here is installment accounts. This is another type of loan, but there's a specified period of time in which you will pay that account back. What we call a term. So you're going to be paying that back in installments over a specific period of time. We also have mortgage accounts. These are loans specific to real estate as either an installment or a revolving line of credit. You'll see both on a credit report. Collections or derogatory accounts. These are debts that an original creditor has either sold or transferred to a third party to collect upon the unpaid balance. And sometimes it doesn't get transferred to a third party. Sometimes the original creditor will actually list it as a collection or a charge-off, but that does report on your credit report as a derogatory account. And then we have public records. These are accounts that are on file with local, county, state, or federal courts. So a good example of this would be a bankruptcy or a judgment. Okay, and these have a negative impact on your ability to qualify. We'll talk about the impact when it comes to credit scores. Any questions on that so far? Okay, awesome. Information listed on your account. So what you're going to see when you look at your credit report is you're looking at each account. The age of the account, the payment history, so a full history of your payment history of up to 2 years. Balance information of balances owed and or credit limits. The account status, whether the account is open or closed. The account type, so this is going to be the type of loan or debt. The original creditor, sorry there's a little bit of a glare there. The account number. The account ownership, this is important. This is a question I get all the time, which is, if I have an account and my spouse is on the account with me, how does that impact my credit score? Well, this is the area that you're going to see that. It's either going to report as individual, joint, or you'll see it as an authorized user. Those all have different impacts on your credit score. And then account notations. These are notations left by the consumer or the creditor regarding the account. There's a section on your credit report or for those of you who have ever disputed an account before, this is where you're going to see where a creditor or the credit bureaus will list that that account has been disputed, or if you disagree with the reporting of that information. So this is common information that you'll see listed on an account. And then this is how to spot errors and inaccuracies on credit reports. Now, the reason that I put this on here is because when we look at a credit report, again, we want to look beyond just the credit scores. We want to look at the data. And 100% of the data on your credit report has to be fair and accurate. Meaning that if any of the information is inaccurate, unverifiable, misleading, or outdated, it has to either be fixed or removed from the credit profile. And that's not just a rule, that's your right as a consumer per the Fair Credit Reporting Act. Okay, it's a very big deal. And what we find oftentimes is that there's a lot of misinformation or inaccuracies on a credit report. So this is what to look for. This is kind of that secret sauce to be able to identify ways to help you improve your credit score by fixing inaccuracies. One of the first ones here, missing creditor information. Some consumers deal with accounts that are reporting without a creditor listed. Have you guys ever seen that before? No? When you look at a credit report, oftentimes when we see collections or charge-offs on a credit report, sometimes it will show up and there will be no creditor listed at the top of the account, which is frustrating because if you want to resolve the account, you don't necessarily know who you're dealing with, right? It's a very difficult situation. Second one, inaccurate balances. This happens all the time, especially with derogatory debts like collections or charge-offs. So looking at your credit report, you want to make sure that there's creditor information, that the balances are correct, and then whether or not the accounts are too old. Now, this is an extra credit question, so I'm going to throw you a curveball here. How old does an account have to be considered too old? Any ideas? Anybody online?
7 years.
7 years? From when?
The last
report?
report or the
You're
last
so close.
derogatory?
We're right in the middle there.
The last charge, the last
Resolution.
movement, the last.
There you go, the last activity, right? The date of last activity. So on collections, for example, that 7-year time frame, what we call statute of limitations, which is federal, right? There are different state regulations there. But in terms of how long it can stay on your credit report, 7 years from the date of last activity on a collection. But depending on the account, those rules can change. For example, let's say you have a credit card, you charge up $1,000 and you never pay it. That credit card goes into a charge-off status, which is just another form of a collection, okay? The rules associated with that is that it's 7 years from the date of first delinquency, okay? So as soon as that account went 90 days, it's not the date of last activity. So a lot of people get confused because they'll go on their credit report and they'll see a collection on there from 10 years ago, but the date of last activity, whoops. Oh, we're good, okay. But the, thank you, you saved me. But the date of last activity, unfortunately, has been updated, you know, whether it's 1 year, 5 years, whatever it is. So we're gonna talk a little bit about that. But when you're looking at your credit report, if you see accounts on there where it's over 7 years from the date of last activity, that's a common violation. That account is too old to be on your credit report, and it's violating your rights as a consumer. This last one here, mixed credit profiles. This is a really difficult situation. You're shaking your head here. Mixed credit profiles are frustrating. Does anybody know what a mixed credit profile is? Yeah, you know.
Close names, something that is not yours reporting on your credit report, vice versa.
Yes,
Yeah.
exactly. It's where other people's data gets pulled into your credit report, and it is obnoxious and it's frustrating to deal with, right? So another reason why you want to be looking at your credit report on a regular basis, because what we'll find is that if you have a common name or if somebody mixed up your social security number, other people's data can end up on your credit report, okay? Which again, is a violation of the Fair Credit Reporting Act. So these are just a few recommendations, things that we see that are most common in terms of how to spot inaccuracies or issues when it comes to data reporting with your credit report. Are there any questions on that? No? Okay, awesome. So, what goes into a FICO credit score? For those of you online and for those of you here in person, I've said that it says CE classes before. I'm just a messenger. I do not work for FICO. I don't claim to know every element of a FICO credit score. If you want to fight me on it, I will. It's okay. But I'll tell you, credit scoring is very complicated. And so I'm going to go through what FICO has provided us and try to explain it to the best of my ability. But know that there are over 100 individual factors that go into a FICO credit score. And not only are just FICO credit score is complicated, but now we live in a world where we all have multiple different versions of credit scores, right? So now you can go to Credit Karma and you see your Vantage score 3.0, and then you go to a mortgage lender and they pull a 20-year-old FICO 2, right, with Experian, and your scores are 40 or 50 or 20 points different, right? So we live in a world where credit scores are kind of complicated. I'm going to get into it here, but again, there's a lot of information that maybe I won't be able to answer. So 30% of your credit score is made up of amounts owed. What they're talking about here is your total debt load, but really the biggest portion of this is revolving credit lines. So if you have credit cards or revolving accounts that have high balances, it's having an oversized impact on your credit score. That's why when you meet with a mortgage loan officer, one of the first things they're going to look at is how are you using credit cards? Because if you use credit cards as a tool for credit score optimization, you're going to succeed. But if you have really high credit card balances and you don't have a strategy to get those under control, it can really pull down your credit score, okay? And that's because it makes up such a big portion of your credit score. 35% of your credit score is made up of payment history. Age-old advice, right? Pay your accounts on time, you'll have a good credit score. It's about 35% of this. But for those of you who are future home buyers, okay, make sure to put your accounts on auto pay. We're going to talk about that here in a little bit. One of the worst things that I come across is people who are really close to getting ready to buy a home, and then they have a late payment on their credit score. We had a situation yesterday with a home builder where there was a person who had applied, they were getting close to reaching their credit score goal, and their score dropped 60 points because they missed a payment on an account, okay? And the hard part is that that's a sustained hit to your credit score. You don't just recover quickly, okay? So make sure that you're paying your accounts on time. That's a big portion of it. New credit is 10% of your credit score. What we're talking about here are inquiries. So if you aggressively apply for credit, like credit cards, store accounts, auto loans, things like that, it can negatively impact your credit score. So if you are in the process of getting ready to buy a home, we recommend that you use caution when it comes to applying for credit, and really don't apply for anything unless it's absolutely necessary, okay? 15% of your credit score is made up of length of credit history, just having established credit for a long period of time. And then 10% of your credit score is made up of a credit mix, so having multiple different types of accounts. So for example, if you only have auto loans, or if you only have credit cards, you're going to see your credit score suffer a little bit because they want to see a healthy mix of different credit lines on your credit profile. So we cruise through that. Do you guys have any questions on that? No? Okay. You guys are great, by the way. Nobody's fighting me on this stuff. The one thing that I want to
wait
talk
till we
about,
get to Q&A.
Yes, yeah.
We'll be here all
I'm
day.
gearing up for it here. Before I get into paying collections, I touched on the Vantage score earlier. And one of the really important things that I want to emphasize is that if you develop healthy credit habits, then you're going to have a good credit score across all credit scoring platforms, right? Credit Karma, Capital One, mortgage lending, FICO 8, FICO 9. There's FICO Ultra now, FICO XD. FICO 10 just got launched. It's coming to the mortgage industry next year. You got Vantage Score 4.0. Tons of these credit scores out there, okay? But they're all based on the same thing, which is if you have healthy credit habits, if you know how to use credit strategically, you will have a healthy credit score. So I hope that that helps those of you who are really worried about all of the discrepancies when it comes to your credit scores, because they're all over the place. The foundation is the same across all of them, right? Which is learn how to use credit scores or your credit strategically to maintain a healthy credit score. So another thing that's really complicated, I run into it all the time. Oftentimes when people are working to improve their credit score, they look at their credit report, they see that they have a collection or multiple collections on there, and their natural reaction is to do what? It's to pay it, right? Is that a good or a bad thing?
I
Right?
assume good.
You would assume it's good. If you owe people money, you should pay the money back, right?
Is it not?
It is a good thing. Morally, it's a good thing, okay?
Morally.
We're 6 years and 6 months into this. I'm gonna let it ride for the 7 years.
Right? The hard part about my job is that I advocate for people to pay their debts, okay? But I advocate for them to do it strategically, because oftentimes what happens is that if you pay an old collection, it has a negative impact on your credit score because that date of last activity then updates and it resets the 7-year statute of limitations associated with that account. Okay? Now there are some rules that have come out in the past 2 years that are trying to help consumers with this. So for example, medical collections. The No Surprise Act was passed in 2021, I think. And so if you pay a medical collection, that collection has to be removed from your credit report. Huge victory. But you do have to take action. You have to dispute it. The credit bureaus aren't just going to remove it for you. Okay. In addition to that, on certain credit score models like a VantageScore 4.0, medical collections don't even impact the credit score, and paid collections don't impact the credit score. Right? So really positive things. But in our world, with the mortgage credit scores that we use right now, the difficult part is that if you pay a collection, there's a good chance that it might lower your credit score. So a couple things that I want to advocate for. If you have a collection on your credit report, we always recommend that you investigate the account with the credit bureaus to make sure that it's accurate, right? If the account is in violation of the Fair Credit Reporting Act, it should probably be removed from your credit report. A good example of this is we had a client come to us who signed up for Vasa Fitness when they were very young. They now have a $1,700 collection on their credit report from a $30 a month membership, right? Kind of outlandish, right? And so they're dealing with a situation where they want to resolve that account to buy their house, but they're also trying to find out whether or not, it's worth resolving that account. So one of the things that we recommend is always investigate it and validate it with the creditor. Make sure that they have the correct balance, make sure that the information is correct, make sure that they followed the rules with collecting the debt, and that they can prove that it's actually your debt and that the balance is accurate. It's worth going through those processes to protect yourself before you take action to negotiate a debt. So let's say you've got a $500 collection, let's say it's from a credit card or something like that. So you want to resolve that collection and you know that it's accurate. You've gone through the process of investigating and verifying that debt. One of the things that we recommend that you do is negotiate the outcome before the balance. And what that means is you're going to negotiate with the creditor to see what they're willing to do to either remove the derogatory information from the credit report or to show that the account has been paid even though it's been settled. Ideally, you want to see that account removed from the credit profile. There are certain collection agencies that are willing to do this, right? And there are certain ones that are not. How many of you guys ever had a Gold's Gym collection? You're all lying. Everybody's lying. Everybody's
We
lying.
don't go to the gym. We don't go to the gym.
Oh, come on. My first week in college, I walked in, got a Gold's Gym membership, and by the end of the week, I had a Gold's Gym collection. I mean, it just happens that fast with certain companies. And some of the collection agencies that were associated with Gold's Gym back in the day, they had a zero tolerance on deleting accounts from a credit profile. But then you have other creditors that are absolutely willing to work with you for the removal of derogatory information from your credit report if you pay them, right? So ultimately, it's always worth asking what can be done in terms of the outcome on how it reports to the credit bureaus before you start negotiating the balance. Okay, does that make sense? Because we see it the other way around. We have a lot of people who get really hot and really pissed, right? And they call the collection agency and they just call them bad names, thinking that that's going to be a good negotiating strategy. It's not, I promise you. They're used to it, okay? So ask them what they're willing to do for you, and you'll be surprised. Oftentimes they're willing to work with you to get a positive outcome. Oh, my bad. Okay. So, any questions on that? Okay, awesome. So let's talk about credit optimization. When it comes to credit optimization, there are 3 things that I see that really make the biggest difference. We already talked about most of them. So the first one here is credit card utilization. If you have a good strategy for how to use credit cards, that can put you in a better position to qualify for a home. Would you agree with that?
Yeah, absolutely.
So giving yourself time to build a plan and getting your credit card balances under control can optimize your credit score and it can optimize your purchasing power. One of the things that we recommend is that if you have credit cards, try not to use more than 30% of the available credit limit and get in the habit of paying it off every month. If you are like those people on Reddit who are trying to get to an 850 credit score, which is ridiculously complicated and hard, one of the things that you can do to gamify your credit score is to carry a balance between 1 to 9% of the available credit limit, and that has been proven to help with optimization of your scores. Okay. So credit card utilization and learning how to use credit cards is a great way to optimize your scores when you're going into the process of buying a home. The second one here is avoid unnecessary inquiries. These are a silent anchor on your credit profile. So if you're thinking about buying a home next year or in 6 months, just stop applying for credit unless it's absolutely necessary, okay? Just because the way the inquiries work, specifically hard inquiries, is that they stay on your credit report for 12 months. They're visible on your credit report for 90 days, but they can negatively impact your credit score for up to 12 months. And if you're aggressive about applying for credit, then that can have a negative impact on your credit health. And then,
I thought it was 2 years.
for inquiries,
Yeah.
negatively impacts your credit score for 12 months. Your payment history is 2 years, but inquiries are 12 months.
Inquiries drop off every 12 months.
Yes. So they stop having a negative impact on your credit score.
Oh, okay.
Payment history. If you're looking to build just an ironclad routine, we do recommend setting up auto pay, especially if you're getting ready to buy a house. The only reason that we recommend this again is because late payments have such a big negative impact on your credit score. Okay, so make sure that as you're getting ready for that home buying process, that all of your accounts are being paid on time and you're eliminating the potential risk of missing a payment. Okay, any questions on that?
Well, it is pretty hard to miss a payment, right? Because it's like 90 days. So it becomes late, or it's not even late until like 60 days.
So
If
student
you don't
loans.
make your minimum payment,
Yes.
it
So
takes a
student-
long time for it to be like an actual missed payment.
Yes, so depending on the account. So student loans have like these weird rules, right? Where you have to go, I think, 90 days before it will show as a delinquent account. But there's also really aggressive creditors where if they give you the buffer period to pay the account, and then if you go a full reporting cycle without paying, it will trigger that 30 days. So technically it is 60 days, right? But if you go 30 days from your payment due date, then that's what will trigger that 30-day late payment on credit. So you're right, 60 days,
Right.
but if you miss that payment and then it goes 30, that's what's going to register.
Right. Yeah. If you don't make like a minimum payment at least
Correct.
at 30 days,
Yep.
and then you go another 30.
But we see it all the time where people say, I totally forgot I had that.
Yeah.
What we see is people have credit cards that they haven't used forever and like an annual fee hits, right? And then they didn't know about it. And then next thing you know, it's like this frantic, trying to call American Express and negotiating with them to remove a late payment, which is obnoxiously difficult, right? So definitely be careful when it comes to your payment history, okay? Protect that and do everything you can to make sure that the accounts don't go late. Any questions on that? Great topic, by the way, because a lot of people think that if they don't pay it on the due date, right,
Right.
that's going to trigger a late payment. But it technically it's 30 days from when the payment was due.
Yeah, I mean, it's like if you sign up for a credit card and then you just totally forget about it, like you just have to pay attention to it a little bit.
Yeah, you don't need to be fretting about it every
Right.
day. Yeah, but just again, I mean, you'd be amazed at the situations that we run into. So, really good point. Okay, so a couple steps that you can take to boost your credit score before a loan application. First one, give yourself time and build a plan. Last minute plans with credit don't work, okay? There is no magic wand. You cannot make just collections disappear. You see this probably all the time, right? There's very little that can be done in a very short period of time with credit. It's a slow moving process. So give yourself time. Regardless of where your credit score is at, it's a good practice to take time to boost your credit scores to get the best available product and interest rate. Step 2, if possible, either pay your credit cards off or carry a small balance. Again, giving yourself a couple months to get your credit cards in line is a great strategy so you can maximize your purchasing power. Step 3, set your important loan payments up on auto pay. Step 4, take action on resolving or removing derogatory items that are impacting your credit health. In resolving credit challenges, disputing, all these things, these are things that can be done on your own. You don't have to hire a company to do that, okay? There are companies like mine out there that will help you, but you absolutely can do it on your own. And for example, on our website, we have tons of free resources that explain how to negotiate with creditors, how to validate debts, how to dispute information with the credit bureaus. I'll give you a lot of information at the end of these slides as well, but definitely take action. A lot of people, because credit is so complicated and it oftentimes feels like such a big burden, they get paralyzed by it. But once you get started in that process, you'll start to gain momentum and you'll see how many resources are available for you, and you'll start to see progress with your credit score. And then again, I've harped on this, just last one here, avoid any new inquiries, okay? Again, this is like the thing that drives me nuts, people getting ready to buy a house and they go apply for a couch before they have the house, right? So, any questions on that? Okay. I put this in here because it is a very important subject that is creating a lot of havoc for consumers. Identity theft is a nightmare, okay? It is very difficult to fix. It is very difficult to prove that you are a victim, and oftentimes it takes a very long time to resolve. So I'm not going to go through everything on here, but what I would say is that if you're not actively using your credit, it's a good practice to freeze your credit profiles with the credit bureaus, okay? Limit the ability for people to get access to your credit. If you are worried about potential identity theft, one thing that you can do is monitor your credit on a monthly basis. And again, we're looking past the credit scores, right? And what I want you to do is go down to the inquiry section of your credit report. And if there are inquiries on your credit report that you don't recognize, that's a red flag. That means that your credit score might be compromised, okay? So protect yourself from identity theft, because if you're looking to buy a home in the future, or to use your credit in the future for anything, identity theft can really be a big roadblock, and it takes a really long time to resolve. Okay, so protect yourself on that. This is the, I'll send this out to everybody, but this is the information on where you can go to freeze your credit profiles. Okay, with each credit bureau, you can do it online, or you can call them. Calling them is a nightmare, so just do it online. Is you guys, have you called the credit bureaus before? Yeah? Okay, then you kind of know, it's a mess. So you can do it online there for free. Last thing here, I put this up as kind of a ruthless self-promotion. We do have an online artificial intelligence-based credit repair software. It is amazing. It auto-generates our professional dispute templates on the spot. It tracks all of your results for you, and it will show you a graph of your credit score increase over time. It is an amazing, amazing product, and it's $39.99 a month. So I put the information up there. You can go to premiercredit.ai to look at that information. And then as always, if you need professional help, if you want somebody to do the work for you, we have credit specialists who will be assigned to your casework, who is more than happy to help you when it comes to improving your credit health and getting you ready to hopefully qualify for a home loan. So, big victory. Nobody fell asleep. Hopefully nobody fell asleep on the online stuff either. But yeah, that's all I got for you in terms of the presentation, so thank you.
So thank you so much for coming. Real quick, I have some questions. Are there any questions for you, any that came in online?
So this is
Before
the
I launch
AI
into-
version. What is like a professional cost? If they were to say, hey, we would like you to really help us, like, is there an estimate that you can kind of what that may look like?
Yeah, so we charge a flat fee, so it's $139.99 a month, and it's $39.99 to start. So you're charged $39.99 when you sign up, and then each month after that, it's $139.99 a month.
And how long on average, I mean,
Yeah.
would somebody be paying for that?
Great question. The average turnaround time is between 6 to 8 months.
What does that look like monthly? So that fee monthly, what does that entail?
Yeah, great question. So you'll be assigned to a credit specialist. That credit specialist communicates with you every month. They're communicating via text, email, and phone calls. And what they're working on is your action plan. We build a 6-stage action plan where we take you through 6 stages of casework that are designed to help you optimize your credit scores, remove derogatory items that shouldn't be on your credit report, and most importantly, resolve derogatory items that are accurate, that are holding you back from qualifying for a home. So that's what the credit specialist is doing with you as you're going through this process. And we only work by referral, and we only work in real estate. So our job is very specific, which is to get your clients into a position where they can credit qualify in an ethical and responsible way by resolving credit challenges and helping them optimize their scores. It's a great question.
What do you find to be the most common challenge when people are asking for, when they need the, specific custom tailored plan? What do you find are the most common challenges?
Yeah, I would say, I've been doing this for almost 14 years now, and I'll tell you, it's persistence. A lot of people have a long history of dealing with credit, getting collection calls, dealing with all of these really emotional, frustrating things. And the thought of going through all of that is a huge roadblock, right? Because they think, oh man, I'm just going to be put through the ringer. But a little bit of persistence goes a long way with credit, especially when you have the right tools that are available for you. So taking action and persistence, that's probably the first thing that we see is people that are just very hesitant because credit is so complicated.
Right.
The second thing that we see for a lot of people is just not knowing what the rules are when it comes to credit and credit reporting. So a lot of people will contact us and say, hey, I've got this situation that happened. What we see all the time are life events, right? So divorce, job loss, medical emergency, something happened to their credit, and they're confused on what that is and what they have to do about it, right? And so just kind of, and again, you don't need professional help. You can absolutely fix your credit on your own. So whether you're looking for yourself or you're looking for professional help, looking at the rules about credit, collections, things like that, there's tons of information out there that can really help ease that burden, right? So just kind of the education and knowledge about what to do with credit challenges can really help you. So those are probably the two most common things. It's just persistence and then kind of knowing the rules about what's going on with credit.
So as a loan officer, I see that same thing. It's that initial hurdle of being scared to just make the first step or not knowing what the first step is. So for somebody that is kind of in that freeze moment, I suppose, what would be your best suggestion? Would that be to maybe look at this first and see if it's something that they can handle on their own, or just reach out directly? What would be your suggestion for that?
Yeah, great question. The first thing is just take a deep breath, right? Because it's going to be okay. Credit is a snapshot in time. It's not a life sentence. A lot of people feel like it is. So just know that there are potential solutions. And then yes, we provide a free introductory session for all clients. So even if you don't sign up or pay for one of our products, we're still going to have a conversation with you about what you can do. And if you go to our website, I should have put it on this slide, but if you go to premiercredco.com, there's a blog section, and that's where we have years worth of free resources designed to help you be able to take action to improve your credit health. And there's so many resources out there. So I think the big thing is just, kind of take a breath and know that it's going to be a little bit of a process, but it's worthwhile, right? Because whether you're in a position where you can't buy now and you're trying to buy in the future, or you can buy now, but with how expensive everything has gotten, you're trying to increase your purchasing power, which credit scores can do that. Whatever it is, just educating yourself about credit all of a sudden becomes this big confidence booster to be able to take action. You're going in, you're having conversations with mortgage loan officers, with real estate professionals, and you're confident about it instead of feeling like, what's going to happen next. So,
Right.
Can you repeat that website one more time?
premiercredco.com.
Any other questions coming in from online?
I don't think so.
Awesome.
Good?
Nobody's
Okay.
making fun of my height. That's good.
So everybody that came, thank you so much. Again, this is Alex from Premier Credit Consulting. We're here with the innovative team from Coldwell Banker. And then I'm Bree from Guaranteed Rate Affinity, Bree Osier. All of us are here to work as a team, help you get to where you want to be and where you need to be to get into the real estate field, get your first home, get your second home, whatever that might be. But this is meant to empower you and help you make that next step, and we want to help you make that next step together. So let us know how we can help, and thank you for viewing tonight.